Okay, good morning everyone, and again I'd like to welcome you to my YouTube channel. This is your Prof. Zeus, and we will continue our discussion on basic accounting. Okay, for to help those in the second grades 11 and 12, and of course those also in their first year of BSA program. Okay, so we're done with the recording, with the posting, and of course preparation of the trial balance. Okay, as steps in the accounting process or cycle. Now we're going to the next step, which is of course the adjusting the books, no? So we are now in the adjusting the books.
Next semester.
Okay, what do we mean by adjusting the books? So by adjusting the books, ano gagawin natin? We are updating. So update the balances. Okay? Does it mean there are entries that we have recorded in error or wrong entries made in the past? No, it doesn't mean that way. But because of the passage of time, okay, there are balances of certain accounts that needs to be updated. Okay, because of certain events that happened, okay, or just as a passage of time, that we have to recognize the changes in the balances of those accounts. Okay, so first we are going to study what are these adjusting entries, and then we will apply it to our existing exercise. Okay, so therefore the first pair of adjusting entries pertain to what we call accrual. Okay, so as I've mentioned during our discussion, okay, accrual basis of accounting is what one of the assumptions, okay, or principles underlying the preparation of financial statements. Okay, so for accruals, it could either be what? Accrual of a revenue or accrual of an expense. Now remember, for accruals, we are going to recognize the item even if, say for example, we haven't received any payment, that's for the revenue side, or even if we haven't paid for the expense. Okay, so sabi natin, we recognize revenue even if not yet collected. And here, we recognize the expense even if we haven't paid. Now, what are examples of this? Okay, now for revenue, say for example, you rendered service for a customer on December 31, but he hasn't paid for the service, then you can recognize the revenue because you rendered the service and you are entitled to receive the payment. Okay, now for the expense, in this case, no, you haven't paid for an item that you have already incurred or you have received the benefit from it. Like say for example, the billing of Meralco. Okay, for Meralco billing, ano nangyari? You experience the benefit, or you receive the benefit from the, say for example, an air conditioning unit, but you haven't paid. Why? Because you haven't received the billing yet, so you don't know how much amount you have to pay. So you receive the billing January of the following year, but the question is, when did you receive the benefit? You received the benefit in December, not in January. So you have to recognize the expense in December, not in January. Okay, so in terms of the income, okay, accrual of the revenue, so anong sabi natin? We will recognize the revenue, so therefore there's an increase in revenue, so credit ka ng revenue. What about, well, what is the pair of this revenue account? Since you already rendered the service but haven't received the payment, ikaw ang nagpautang, parang ganun. So there is a receivable that should be recognized. So this is your adjusting entry for the accrual of revenue. What if it's an expense? Okay, sabi natin, we recognize the expense. Like in the case of Meralco, we recognize the expense, and since we haven't paid for it, then we have a liability, accrued expense for certain amount. Okay, so this is the first pair of adjusting journal entries, no, accruals, pertaining to accruals, that is accrued revenue and accrued expense. Now the second one actually pertains to deferrals. When you speak of deferrals, we are what? We are referring to collections made in advance. So here, you already have collected the money from the customer, but you haven't rendered the service yet, or you haven't delivered the goods. Okay. Now for deferrals, we have two ways of recognizing this. Number one, we can treat this as revenue. And number two, we can say it's still a liability since we haven't performed the service yet. Okay, so it could be viewed as a liability. Now, how would you know if the bookkeeper or the accountant use the revenue or the liability method? Okay, you would know by looking at the entry upon the receipt of cash. So this is not yet the adjusting entry, no? This is the entry when they receive cash. Under the revenue method, the cash received will be treated as a revenue. So therefore, we have cash, and then we have revenue. Now, under the liability approach, okay, you are going to recognize the collection as a liability. So debit cash and credit ka ng unearned revenue. So how would you know if the revenue or the liability approach was used? Look at the trial balance. Did they recognize everything as revenue? Meaning you don't have any unearned revenue in the trial balance. But if in the trial balance, you will see unearned revenue, then you can say that the liability method was used, right? Okay, now let us have an example. Assuming that, AGA, okay, received, say, 36,000, okay, from a tenant or lessee. Okay, that is for the rental of a certain an office space owned by AGA. Okay, and the rental is good for three months. Say for example, December, January, February. Okay, so the rental, the 36,000 is good for the months of December, January, and February. Now let us assume that the year end of the company is December 31, wherein the company will have to prepare its financial report. Okay, so 36,000, this is good for 3 months, so divided by 3, you will get 12,000 per month. Okay, so December will have 12,000 per month, January will have 12,000, and February will also have 12,000. But the lessee or the tenant, okay, already paid for it. Okay, so therefore, what will be our entry? Debit cash for 36,000, and then credit ka ng rent revenue for 36,000. Now same goes here, no? So debit ka ng cash for 36,000 and credit ka ng unearned rent for 36,000. Now if you look at the timeline that we have prepared, no? If this is the year end, you would see that the December is already used. So therefore, as far as the lessor is concerned, this is already an earned portion, a revenue that's already earned, no? Meaning, if say for example at December 31, the lessee would say, I don't want to continue the lease. Okay, will the lessor refund the 36,000? The answer is no. He might be able to refund, but only the remaining portions, no, the January and the February, because the lessee will no longer occupy or use the premise, no, in January and in February. So therefore, this is still what? The unearned portion. Right? Unearned portion pa rin to. But if you look at your entry upon receipt of cash, okay, ano nangyari dyan? Your earned portion or your revenue portion is 26 instead of 12. So we can say that the revenue what is overstated. Overstated by how much? Overstated by 24,000. Okay? Which is actually the rent no, for the months of January and February. So therefore, in our adjusting journal entry, what are we going to do? We are going to reduce the rental revenue by the amount of revenues that is not yet earned, because the only portion earned is 12,000 pesos, but we have recognized 36. So therefore, we will what? Decrease the revenue, so rent revenue, by 24,000 and recognize that as a liability. for 24,000. Okay? Now, if the liability method was used, everything was charged to liability. But if you look at this one, if you look at our timeline, okay, this is already earned, and the unearned portion is only 24. But here, we recognize everything as 26. So there's what? An overstatement in our unearned rent. So anong gagawin natin? Dapat bawasan natin si unearned rent, no? At ilagay natin yung portion na na-earned na natin, which is 12, because this is the one that's not recognized under the liability method, okay? So bawasan natin si unearned, okay, for how much? Dapat magkano siya? 24. But what we have in the books is 36. So bawasan natin siya by 12. Debit unearned rent and credit ka ng rent revenue. 12,000. Okay? So yan. If you look at our journal entries, they are completely the opposite. Here, the rent revenue was debited. Here, it was credited. Here, the unearned rent was credited, and on the other side, the unearned rent was debited. And even the amounts, they are not the same. Now, let us take a look at the effect. No? Will using the revenue method will give you a higher revenue, or is it going to be the liability method? Let us try to do a T account. Now, let's try to analyze through what we call T account. Okay? So here you have rent revenue. And here you have the unearned rent. On the other side, you have the unearned rent. And here you have the rent revenue. Okay? So here, what we did is we credited rent revenue for 36,000. So this is okay. And then we debited it for 24. So therefore, the resulting figure is 12. Now, for the unearned revenue, we credited the account for 24,000, right? Now, for rent revenue here, anong ginawa natin? Unearned rent pala. So, meron kang credit na 36,000. And then, dinebit mo siya for 12. And then, kinredit mo yung rent revenue for 12. So, what do we have here? Under the unearned rent, you have 24,000 of unearned rent. Now, if you look at the T account analysis, no, for both methods, meaning the revenue and the liability method, you will discover that, or you will learn that, you will observe that the revenue here is the same, and then the unearned revenue is also the same. So here, essentially the same, and this one is also the same. So what conclusion can we give from this example? That whether you use the revenue approach or the liability approach, you will arrive at the same amount of rent revenue and unearned rent. Okay, so this is for the deferrals. Now, the next one is what? The next step is for the, what we call the prepayments. So, pag prepayments naman, ano to? This can be likened to your prepaid mobile. Now, how does a prepaid mobile work? You have to first load it with a certain amount before you can use the service, no? So prepayments is like that, okay? You first pay before you can use it, okay? So here, payment first. Now, just like our deferrals, no, we also have two ways of accounting for prepayments. One is we can say it's already an expense, no, because as you use it, you charge it to expense. Or second, we can say it's still an asset. Okay? Now, again, how would you know whether the expense method or the asset method was used? Simple. Upon payment, what did they debit? Is it an expense or is it an asset? Okay. Is it an asset or an expense? Okay, so yun ang ating pag-uusapan. So when you say, for example, upon payment, no, and under the expense method, when the payment was made, the debit was to an expense. So debit expense and credit cash. Whereas under the asset method, the debit was an asset and the credit is cash. Okay, so these are the two entries, okay, upon payment of of an an item. No, let us have an example. Say AGA purchase office supplies for, sabihin natin 12,000 pesos. Okay? At December 31, sabihin natin 2/3 are still unused. So, bumili siya worth 12,000, but as of December 31st, 2/3 is still unused. So, under the expense method, we will debit everything to expense. So, debit supplies expense and credit cash. For how much? This is 12,000 pesos. Now, under the asset method, upon payment, we will debit an asset. So, for example, prepaid supplies for 12,000 and then credit cash for 12,000 pesos. Okay? Now, if you look at the given, okay? Now, at the end of the year, there's still what? 2/3 that is unused. So what happened to the 1/3? Okay? So if this is 2/3 unused, the 1/3 is already the used portion. Right? This is already the used portion. So if you look at this one, you charge everything to the used, which is 12,000. But according to the items or to the facts, no, only 1/3 is used. 2/3 is not yet used. So therefore, how much is the unused portion? 2/3. So 2/3 of 12,000 is how much? 8,000? Tama ba? Okay, so therefore, our adjusting journal entry is to recognize the portion that is not yet used. Okay, which is the one, ito pala, which is the 2/3. Okay? So, debit tayo ng supplies or prepaid supplies. Gawin ko sana unused no? Prepaid supplies for how much? We will debit prepaid supplies for 8,000 and credit your supplies expense for 8,000. Okay? Now, under this one, under the asset method, what will be our adjusting entry? Again, you look at the prepaid supply. Sabi niya 12,000 was prepaid, but at the end of the year, only 2/3 is unused. So, anong meron tayo? We have an overstated supply, prepayment or an asset, no? So, ang gagawin natin, we will reduce the prepaid supplies. By how much? Remember, you have debited an asset, okay? Pero ang unused mo daw ay magkano? 2/3 lang. Ang used mo is 1/3. So anong hindi naka-record? Etong use, okay? Etong use portion. So debit ka ng supplies expense. For how much? Supplies expense mo 1/3 use. So therefore, this is what? 4,000 pesos. Okay? So therefore, if you are going to again analyze everything to what we call a T account, okay? So dito meron kang supplies expense, and then you have prepaid supplies. On the other hand, here you have prepaid supplies, and then here you have your supplies expense. Okay, so therefore, okay, so here, we debited an expense office supplies for 12,000. And then here, we credited that for 8,000. Alright, so therefore, the supplies expense is 4,000. Now, the prepaid supplies was debited for 8,000. So, if you would notice, out of the 12, it was split into two, an expense and a prepayment. Okay? Now, here, we debited prepaid supplies for 12. And then, we credited prepaid supplies for 4. So therefore, the balance of our prepaid supplies is 8. Now here, we debited supplies expense for 4. So if you look at the comparison, okay, both T accounts, okay, under the expense method, okay, you have a debit to prepaid supplies for 8,000, which is the same as what we have if it's an asset method. So pareho lang siya. Now, ganun din naman sa supplies expense, no? Pareho lang siya, tigo 4,000. So again, what conclusion can we make? That even if you use, whether you use the expense or the asset method, you will arrive at the same amount of the prepayment or the asset and the expense portion because we are using the same data. Okay? Which is actually here, no? So unused is 2/3, which is 8,000, no? So 8,000 din dito, and the 4,000 is the used portion. Okay? So that's the next one. The next one would be depreciation. Now, what is depreciation? Now, this actually pertains to what? Depreciable asset. Okay? What are the depreciable assets? Say, for example, building. We have office furnitures, okay? Office furnitures, office equipment, all the stuff, okay? So all of those are what we call or consider as depreciable asset, okay? So we realize and we recognize the fact that as even if we have these assets, okay, as you use it or passage of time, the values of these assets will eventually diminish. Okay, so in accounting, we recognize that. Okay, so we do that through what we call depreciation. So under depreciation, what are we going to do? We allocate the cost of the asset, okay, over the years or the periods, okay, we expect to benefit. We expect to benefit from the use of the asset. Okay, so is there any formula? Okay, there's a formula. Now there are different ways of depreciating an asset, but for the purpose of the basic accounting, we will just discuss the straight line method. So if you say straight line, it's just this one. So what does it mean, and when do we apply the straight line method? Okay, it means that you are going to charge the same amount, same amount of depreciation every year. Kaya nga straight line pare-pareho. So if you're charging 8,000, then you charge 8,000 all throughout the life of the asset. Okay? That is what we call the straight line. Okay? So this is applicable when the asset will provide the company the same amount of benefit from the first day of use up to the last day. So what is the formula? The formula for the straight line is you have cost less what? Salvage value, or what we call the residual value, divided by the estimated useful life. Okay, let's go over the formula. So we say cost. This is the cost of acquiring the asset. We say salvage value. This is what? The value of the asset at the end of its useful life. So we are deducting it from the cost. Why? We do not depreciate the salvage value simply because this is recoverable, okay, when you sell the asset at the end of its useful life, right? Now, the estimated useful life, this is actually what? Based on management's evaluation. Okay? Based on management's evaluation, how many years will the asset be used by the company? Okay? So let us assume that AGA purchased an asset on January 1. Purchase an asset. Purchase an office furniture or office equipment for 50,000 pesos. Okay? There's no residual value. And, okay, the estimated useful life is 5 years. Okay, so this is our problem. Okay, so under the straight line method, okay, what will be the answer? It's going to be 50,000, no salvage value, so less 0, divided by 5. So this will be 10,000 pesos per year or annum. So what if, say, for example, this is not January 1? What if, say, this is February 1? So therefore, this is what? This is good for 1 year, so we're going to divide to allocate only 11 months. So times 11 over 12. Okay, so that will be the depreciation expense. Now, how are we going to adjust that? Debit ka ng depreciation expense. This is the adjusting entry, no? for 10,000 and credit ka ng accumulated depreciation. Now, where do we show these accounts, no? 10,000. Depreciation expense goes to what? Your income statement account. It goes to the expenses, no, income statement. The accumulated depreciation, this is a contra asset account. So what are we going? What do we mean by contra? It's what? It's deducted. So we say contra, you deduct it from the related asset. Okay. Now, so therefore, for instance, let's have this one. So assuming this is 2019. So how much is the cost and how much is the accumulated depreciation? So this is what? This is based on the balance sheet. Okay. So the cost is 50,000 and the depreciation is 10. So therefore, the book value or the net book value is what? 40,000. Now, year 2020, another entry was made. Okay. So therefore, the cost is still 50,000, but now the accumulated is what? 10 plus 10, that's 20. So the carrying value is 30,000. And then 2021, you still have 50,000 as the cost, but this time there's going to be 20 plus 10. That's going to be 30,000. So this is now 20,000. And then 2022, the cost is still 50,000, but now this is 40,000. So there's what? Remaining book value of 10,000. Okay. Now 2023, so you still have 50,000, and then this one is already 50. So therefore, there's no more book value. So at the end of December 31st, you would notice that the carrying value is 0. Okay, because we have allocated the full amount, okay, over the period that we expect to benefit from it. The last one is what? The bad debts. Okay, so for what do we mean by bad debts? Now, whenever the company would like to, increase its sales, anong gagawin niya? He can increase it, but they have to, allow customers to buy on account. Okay, now whenever you buy an account, okay, or whenever you purchase an account, no, or you sell an account, there is actually no guarantee that you will be able to collect it from your customer, right? Because some may have the capacity to pay, but they're not willing to pay. But some might have the ability, the capacity to pay, but wouldn't want to pay, and then the other one would want to pay, but they don't have the capacity to pay. So we recognize in accounting that phenomenon, no? And since we are very conservative, we are conservative, so we recognize that. So anong ginagawa natin? We recognize it through what we call the bad debts or uncollectible accounts. Okay, so here you have two ways. You have the income statement approach. So dito, ang basehan mo, kaya kami bad debts because you sell on account. So dito, revenue ang basehan mo. Okay? Now, the other one is the balance sheet approach. Now, for the balance sheet approach, anong basehan mo? That will be your what? Your receivable. Okay? So, ibig sabihin, under the income statement, if we multiply this by the percentage of bad debts, this is now your expense. Now, for the balance sheet approach, if we multiply this by the percentage, this is now the required balance of allowance. So, magkaiba sila ha? Magkaiba sila. Okay. So, here, you have to consider any existing balance in the allowance account. So, let's have an example. Okay. Assuming that AGA, okay, sales 1 million, okay, and has sabihin natin 500,000 as receivables. Okay, now there's no, sabihin natin allowance for doubtful accounts is, sabihin natin 10,000 pesos. Okay? So, under the revenue approach, so revenue, how much is the revenue? 1 million. We base it on the revenue. So, assuming that 5% is uncollectible. So times 5%, how much is this? 50,000 pesos. So this will be your amount that you have to adjust. Debit, bad debts, expense for 50,000, and credit ka ng allowance for bad debts for 50,000 pesos. Okay? Now, under the balance sheet approach, so ang kanyang receivables is 500,000, right? So, assuming that under the if receivables is the one that's used, okay? Assuming that 10% is doubtful, so times 10%, so this is 50,000, right? 50,000. Pero sabi natin, this is what? This should be the required balance of the allowance, okay? So therefore, sabi niya, allowance for doubtful is 10, so we have to consider that. So allowance for doubtful accounts, we have 10,000 as credit, but the required balance is 50. So dapat daw 50 to. So magkano to? You have to add additional 40. So this is the additional provision. So anong entrada natin? So ang entry natin would be bad debts expense for how much? For 40,000, and then credit ka ng allowance for bad debts. For how much? 40,000. Okay? So yun yung mga adjusting entries natin. So the next thing that we are going to do is to apply this, no, sa ating exercise na ginawa, no? Okay, sige, let's apply. Saan na ba yung ginawa natin? Wait lang, ha?
Sir,
Oh,
I gotta go.
sure.
Ako muna rin yung basura, sir.
Salamat. Okay, so this is our exercise. No, this is our the problems, no, that we are going to use. This is the problem that we're going to use. Okay, so let us now prepare the adjusting entries based on what we have. Okay, based on the problem. So, tingnan natin. Kuha tayo ng journal dito, no? So here is our problem. Okay? So what we're going to do is identify what are the adjusting entries that's necessary for us to be able to adjust the records, update the balances of the accounts. Okay? So again, let's go over this one. So here, it's what? It's investment, so there's no adjusting entry. Now, on the second one, prepaid rent. So this is what? A prepayment. Okay? So let us take a look again at the premise, no? The problem. So paid rent for the months of December through February for 36,000. O parang yung illustration ko, di ba? So we are now going to prepare the adjusting entries. So this is December 31. Okay? So again, so first one, okay, this is what I had in the example, no? So ginawa niyang asset method because there's a prepaid rent. Okay? Yan. Tingin tayo dito sa ano, dito tayo. No? So meron kang prepaid rent, so this is for 3 months. Pero ang na-render mo lang is, na-render mo pa lang is, what? 1 month. So 2 months is still, prepaid. You have an asset of 36,000 but you already used 1 month. That's for the month of December, right? So ang gagawin natin is to recognize what? The expense portion. So what will be our adjusting entry? So debit ka ng rent expense and credit ka ng prepaid rent. For how much? Okay, magkano expense mo? That's gonna be for 1 month. No? So debit, credit. So that's gonna be 12,000. Oops, sorry. Ito pala. 12,000 pesos. Sorry.
Sir.
Sige. And then another account is what? Prepaid rent, office supplies. Okay? So office supplies is 10,000. Let us assume that the office supplies is one-fourth of the office supplies has been used up. Okay, so ito, asset method na naman siya. So ano gagawin natin? We recognize the expense portion. Okay? So assuming that again, one-fourth has been used. So therefore, the one-fourth of this which is used is what? How much? 7,500. Okay? So, sorry, one-fourth has been used, so three-fourths is not yet used. So therefore, what? The one-fourth is the expense, and we don't have any supplies expense recorded yet. So we have to recognize the expense. So credit ka na supplies expense for how much? One-fourth is how much? 2,500. No, office supplies 2,500, and then credit ka ng office supplies for 2,500. Okay, so we're done with the prepaid rent, we're done with the office supplies. Okay, office equipment. So this is what this one is what? Depreciation. So let us assume that the company will be able to use it for 5 years. This will be given in the problem, no? So 5 years, with no residual value. So 30,000 divided by 5 will give you 6,000. So we're going to recognize the depreciation expense. Depreciation expense, and then credit ka ng accumulated depreciation. For how much? So that is 5 years, that's going to be 6,000 per year, right? So 6,000, and then credit 6,000. Okay? Now, again, ano pa meron tayo? You have office furniture. So assuming it's also 5 years, okay? Without residual value. So therefore, let us now get our depreciation in the records, no? Depreciation expense, and then credit accumulated depreciation. For how much? So this time it's 20,000 divided by 5, it's going to be 4,000. Okay, and then what else? So there's nothing given about accounts payable, no? Okay, and then revenue, I think that there was a revenue that was recognized. Let us see. Alam ko meron tayong recognize before the revenue, no? Ito. Collected 24,000. So 24,000. Where's the 24,000 here? Collected 24,000 for... That's for the months of December and January. So, tig magkano yun? 12, no? I think we recorded this as revenue. So, ito naman is revenue method ang ginamit natin when we recorded this. So, anong gagawin natin? We have to recognize the portion that's not yet earned. Right? So, the earned portion is what? The December, and the January is not yet earned. So, anong gagawin natin? E di recognize natin yung ating unearned portion. So, debit ka ng rent revenue. Oh, sorry. Was it revenue lang pala? So, debit ka ng revenue at credit ka ng unearned. For how much? It's gonna be 12,000. Okay, so these are the adjusting entries that we have for this sample problems or sample transactions. Okay, again, the purpose of this is just to adjust, to update the balances of the accounts. Okay, yung iba hindi na binigay, so I think okay na naman na to. Okay, we have here the adjusting entry actually for the no more. Okay, so I think these are the adjusting entries that we have to record, no? So we will continue this. We have to prepare the worksheet, okay, that will facilitate the preparation of the financial statements, okay? And we'll do that next meeting. Thank you very much, and stay safe, guys. Bye.